Take a moment of silence at the honoring of the President of Jimmy Carter today. We remember that Jimmy Carter was passed away on Saturday in Plains, Georgia. Agri Gold, this is the production of Back Roads of Illinois. This is the Markets Club podcast. I am Cesar Delgado. I am your host of today's program. I am glad that you are here for today. What is the trends for Friday's world supply and demand from the USDA? We were talking about that with Pam Caraway from Farm Futures and John Heinberger from Total Farm Marketing. Hi. We are watching the world supply and demand for Friday morning at 11. We'll talk about it with Pam Caraway from Farm Futures. Pam is a senior executive at the Farm Futures. How are you today? And welcome back to the show.
I'm great.
We were talking about the world supply and demand from the USDA for tomorrow.
Yes, tomorrow we have the WASDE report. I'm happy to be back here with you. I think a lot of what we say today may get, change tomorrow. But I think we're going to be looking at a lot of changes this year, probably between the WASDE report, then we have the inauguration and some things that the new administration has said that they are going to do. And then in March, we'll have the planning intentions report. We have a little clue about that from the Farm Future survey, and then we'll know more in March.
We will see for next couple weeks. Let's talk about the planting intention report. Could you tell us about it?
Yes, sir. What we discovered with our Farm Future survey, which was conducted in December, is that farmers are looking at planting more acres of corn. They would be up from a mean average of 624 acres in 2024, going up to 632, just slightly for 2025. And then on soybeans, they were at 648 in 2024. The average from the respondents, the mean average is 687 acres. It looks like those acres are going to be coming out of spring wheat and maybe, just expanding. It's hard to tell what farmers are thinking now. I've been in the executive marketing conference in South Carolina this week with some economists at Clemson. And also Dr. Dave Cole was down to talk about farm management and looking at how farmers are going to adapt to a changing environment and a low price environment as far as we can tell.
We're responding to that survey.
Yes, the farmers who responded to this survey, our audience is generally your larger commercial farmers and primarily in the Midwest. So a vast majority are going to be in that Corn Belt area who responded to this survey. And they reported kind of average yields compared to last year. They were on par with their 2024 yields, and then looking at planting more acres of corn and soybean for 2025. How they may change that up, we'll see. I'm sure a lot has to do with what we're going to see on the global market. If Brazil continues to come through with large yields and large production expectations, then that may shift. You may see them come away from the soybeans a little bit and go heavier onto the corn. With the current weather in Brazil, Matthew Cruz from Comstock Investments just reported on farmfutures.com that the drought that's going on down there in the southernmost part of Brazil and in Argentina is impacting their soybean crop. But to date, he didn't expect it to have a major impact on the production because the rest of Brazil is still in good shape. So we'll see how that plays out, and how then how the safrinha crop in Brazil is impacted will have a lot to do with the price outlook for U.S. farmers as they decide what they want to plant. For right now, though, we're showing them planting more soybeans and more corn in 2025.
How is the job status from the U.S. Department of Labor, and how could it affect on the cattle markets?
The job status right now is still good. The unemployment status. What we're concerned about in agriculture right now is what the new administration's plans are in regard to deportation and how that's going to impact farm labor. And that in itself could drive up the cost of farm labor, which is already short. Additionally, for farmers who use H-2A labor, the federal government again increased the wages that farmers must pay. It varies regionally, but in the overall, that cost has gone up as well. So farmers looking at the cost of producing a crop and then looking at low prices are seeing margin squeezes that are significant for them.
How is the labor costs?
The labor costs are high. And what you're going to see is farmers looking to be more efficient and have less labor on their farm. And so we're looking at, and you'll see in our January, February issue of Farm Futures, some conversations about farm equipment and how farm equipment helps to reduce labor needs on the farm. We recently saw some autonomous tractors come to market, and looking at those sort of equipment uses, those kind of efficiencies are going to be a big part of what farmers do going forward. How much can they do by themselves? How much can they do with the right equipment and the right technology? Because the availability of farm labor is probably even the bigger question compared to the cost of farm labor. It's like, if you can get it, you'll pay whatever you need to.
Do you have any final thoughts on the quarter of this commodity prices for right now?
I do. So when we're looking at what farmers are doing with their crop, in the Farm Futures survey, we also saw that about half of the corn crop wasn't sold as of December 31st, and about the same 48% of the soybean crop. Farmers who are looking at their pricing opportunities probably need to protect their downside in their marketing program so that they can weather, whatever geopolitical and global pricing issues and supply and demand issues come forward. It would be good if they could protect their profit opportunity coming into these reports. The WASDE report on Friday, tomorrow, and then also the crop intentions report in March. The key here is going to be to look at your crop insurance, what you can do for revenue protection, to look at your marketing programs, and to be aware of your break-even numbers. Know what it's going to take for you to make a profit, and take that profit anytime it comes available. Don't try and hit the highs. Just try to make a profit.
Is there anything else that would like to talk to our audience on the survey of the U.S.?
We have quite a bit of information available, and we welcome visitors to our farmfutures.com site. And you can also sign up for our marketing newsletter, which comes out twice a day. Just visit us at farmfutures.com. Thank you for this opportunity today. The Backroads of Illinois is a great service for our farm community.
Thanks, Pam. This is Pam Caraway from Farm Futures on the Markets Club podcast. We were going to have a conversation with John Heinberg from Total Farm Marketing about the world supply and demand for tomorrow from the USDA. I want to go to say, I'm sorry about your Packers in Chicago. How are you today?
Doing well. I'm looking forward to the Packer playoff game this week as the Bear fans continue to sit and watch in their own living rooms. But with that, you won 1 out of 12. I'll give you that one. So anyway, looking forward to tomorrow's report. I've been talking with a lot of customers, doing a lot of management in terms of getting ready for the numbers. So let's get into it here.
Thank you. All right, let's start with our discussion on the WASDE for tomorrow. What is your position on that for tomorrow?
Yeah, that's always the $1 million question. I probably fielded that a bunch of times today. I wish I had a dime for every time somebody asked me that question. I probably could retire here. But at the same time, it's hard to gauge USDA reports, and trying to trade them is probably one of the worst things that you can do. So you sit back and you ask yourself, where is my risk? What is my biggest vulnerability in terms of my bushels, in terms of my positioning in the marketplace, things along those lines? And those are the questions that I've been kind of talking with producers about. First off, just a quick review of the numbers. We do expect to see corn carryover come down slightly. And then with that, that could give us some support in the marketplace. We'll see what they do with the yield. We'll see what they do, if they do any more work with demand. I'm kind of sensing maybe those numbers could stay pretty quiet tomorrow for corn. Soybean side, again, expecting to see some tightening in terms of the supply, but realistically, even if we bring carryover down 40, 50, 60 million bushels, we're still over 400, which is still heavy here. And then still focusing on that longer term picture of that South American crop. So a couple things I've been working on for this report. I am still going to treat the defensive side as a key area for me in corn, especially with this nice lift higher. But puts are cheap right now. If guys got bushels in the bins, you can pick up a pretty good floor underneath that. Lock in this 450, 460 area. Leave your bushels open to the upside, but just in case things were to roll over, we get a negative reaction to the report, things along those lines, you got a floor in here and not putting a lot of risk in terms of cost on the table. On the soybean side, kind of the same thing there. I'm still looking at the big picture in the soybean market. Maybe you get some report day reaction. But again, we're still looking at a large supply of beans coming to the global marketplace that is a lot cheaper than the U.S. side. So my fear is tomorrow, even though we get some numbers that could be friendly to the report, the market sits back, looks at the big picture of things, and pushes the sell button again just to keep those U.S. beans competitive on the global scale. The most important number tomorrow, realistically, could be the export sales numbers that come out in the morning. Right now this market is starting to question where the demand is. We've had great demand up to this point, but now corn prices have gotten higher. Last week's export sales were obviously very disappointing compared to expectations. Some of that was more likely tied to the Christmas holiday. Obviously, we still have the New Year's holiday in here this week, so we'll see what those numbers come in at. And again, if we're starting to see some slowing of demand for both corn and soybeans here, that's going to weigh on this marketplace because it's going to want to keep at least some of that demand in front of the market in order to help support these prices.
How was the CONAB from Brazil for December? How compare these two reports on the beans side?
We go look at the reports here for the soybeans. We had that big yield move back in the December report. Probably going to see a little bit more coming on that side as we get into, because of the dry weather at the harvest window and the finishing window. So again, we'll see. Really, still on the soybean side of the equation, what is the demand? Do they make any changes? It's been pretty good. We're just looking at this global situation right now with this large supply of beans coming at us that we just can't fathom at this time frame, and that's going to be the driver of price. I really still think this market will get through this report tomorrow for soybeans and then shift it back over to the side to looking at the weather side of the South American crop. If the weather looks like it's improving, which it is forecasted to, this market could get itself back into a selling situation.
John, which means that the report is big deal for tomorrow from the USDA. Could you tell us why is that?
Well, the January report is the last crop production number for this marketing year until we get to the September grain stocks. So really the goalpost is going to get kind of cemented in the ground here for a while. And this will be the numbers that we're working with, at least in terms of production, all the way through until September. So we'll see how that plays out. And then from there, our mind starts staying focused on the demand and the disappearance and things of that nature until we start getting the crop product, the acres numbers in March, as well as the May report, which is the next time we start getting some new numbers as we put the 25 numbers on the table, or 25, 26 numbers on the table for that marketing year. So again, the January report again is the goalpost setter that we're going to be working with now for basically the next 5 to 6 months here until we start really focusing on the crop that's getting planted this spring.
Markets. Could you tell us what's going on with the feeder cattle? The buyers are going to have more buying at more contract.
Right now the feeder cattle market, yesterday was a tough day. Today turned out to be the exact opposite, plus some. And right now the cattle market continues to be extremely, extremely strong. Cash trade today is the driver as we're looking at cash well up in the low 200s today. Got some strong dress trades, I think breaking last week's record highs. So again, the cattle market finishing at the highs of the day today. So and new highs for the move. So the money flow continues to stay there. A lot of great value for producers out there. Excuse me, as well as opportunity to lock in some decent gains. So again, take advantage of it. But right now, this is a pretty interesting market. I'm not sure where the top is. It feels like we're getting there, but every time we seem to sense that this market has a tendency to move a little bit higher. On the feeder cattle side, again, now we did get talk yesterday. USDA is going to lift that import ban here in the week of the 20th. So that's coming up. Maybe that was some of the factor in yesterday's market, but at least today, again, with that strong cash market, look, we got good money flow into the cattle market today. Feeders continue to climb. Also looking at a cash index, even after today's session, still trading about $5 above the January contract, kind of reflecting truly what's going on in maybe the cash market for feeders. So with that, at this time frame, feels like the cattle market still got room to go to the upside.
How is the slaughter numbers and the choice select cut for this week?
Slaughter numbers continue to stay relatively consistent. And, that's one thing we were talking earlier in the week that maybe the Packers are fairly covered in terms of some of their needs right now. So they backed off a little bit on some of those cash bids, but again, we see them coming to the marketplace here this at the end of the week again. Cash and choice in terms of values, we saw carcasses continue to run strong, close to the 330 level on choice carcasses. So we still have some demand to help fuel this cash market, and the Packers still got a little bit of meat on the bone here at this time frame, so they're willing to make up those bids to meet that demand.
Do you have any final thoughts on the WASDE for tomorrow?
Again, you can't trade the reports. They're hard to do because you don't know, number one, what the numbers are going to be. Number two, how the market's going to react to the numbers. So, like I said earlier, just look at your situation, look at where the risks are to you and your operation or your positioning in the marketplace, and make sure you're managing those risks, especially in the corn side. Things are relatively cheap right now to get some easy coverage in. Soybean side, there's opportunities out there, again, and go from there. But just after this report hits, it's going to probably set the goalposts a little bit. And then we really can start thinking about how we want to finish out the rest of that 24-25 crop and start thinking about getting ready to go with some things in 25-26.
Is there anything else that would like to talk about the planting intention report in the States?
We'll just look forward to seeing how this market plays itself out. Right now, the market is, again, like I stated earlier, telling the producer to plant corn versus the soybean side. It's actually telling the producer more to not plant soybeans than maybe plant corn. So we'll have to see how that continues to play out here. We do obviously have our own domestic needs for soybeans, so we got to make sure we have enough acres to cover that in that regard. But that's going to be probably the big talk in the marketplace here after we get through these numbers, is going to be corn planting versus soybean planting and how the market prices that in to encourage those acres to move one way or another.
Thanks, John.
Thank you, Cesar. Have yourself a great day, and we'll talk to you guys soon.
This is John Heinberg from Total Farm Marketing on the Markets Club podcast. Thanks to Pam Caraway from Farm Futures and John Heinberger from Total Farm Marketing. You can listen to this show on YouTube and wherever you get your podcast. I am Cesar Delgado. This has been the Markets Club podcast. You have a great day.